Welcome to Excel Class Hub. My name is Mr. Smith, and today we are going to be discussing a very important topic in UTME Financial Accounting, trading profit and loss account. We can also call it statement of profit or loss. So what are we going to be looking at? Number one, we are going to look at the meaning or definition of trading accounts. Meaning of trading accounts. We are also going to look at the meaning of profit and loss accounts. We are also going to discuss the items on the statement of profit and what? Loss account. Okay, so what do you mean by trading account? Trading account is prepared to ascertain the gross profit of a business. So the essence of preparing the trading account is to determine or to ascertain the gross profit of a business. So when you are running a business, it's either the business make profit or the business make loss. So sometimes there are some questions that is not necessarily profit. You can also arrive at what? At a loss. While profit and loss account, the essence of it is to determine or to ascertain the net profit or net loss. So what is gross profit? What is net profit? We are going to be discussing that under the items on the statement of profit and loss account. So let's look at the terminologies. The items that are going to find on the what? Profit and loss account. Number one, we have the opening stock. Opening stock. Or you can also call it what? Opening inventories. Number two, we have the closing stock or closing inventories. Number three, we have purchases. Number four, we have carriage inwards. Five, we have return outwards. We also have return inwards. Number seven, we have sales. Number eight, we have our gross profit. Gross profit or gross loss. Okay, so let's look at it one after the other. Oftentimes, JAMB normally set question on trading account. So we are going to discuss this one after the other. Then we are going to analyze how to arrive at the answers when you are asked to look for any missing figures in your trading account. So we start from opening stock. Stock is also known as what? Inventories. Okay, so the opening stock are the what? Are the items for sale at the beginning of the period. So if the business concern deals with what? Car. Of course, the inventories is what? Is car. If the business deals with what? Selling bottled water, the inventory is what? Bottled water. If it's stationary, the inventory is what? Stationary. So the opening stock or opening inventories are the items for sale at the beginning of the trading period. And we must also take note that the trading period we are talking about is usually a year. So it means that if a business starts operating in the month of January, let's say 2026 that we are, the end of the trading period will be what? December 31st, 2026. But if the business starts operation in the month of February 2026, it means that what? The end of the trading period is going to be January 2027. So the opening inventories are the items for sale at the beginning of the what? Trading period. Then number 2 is the closing stock or closing inventories. The closing stock is the items that are unsold at the end of the what? Trading period. It's possible that what? At the end of the trading period, when you want to do account, you want to make your account, that some items that you are selling are still remaining. So that serves as the what? As the closing stock or the closing inventories. Then you have purchases. Purchases are items bought for resale. Okay? Items bought for resale. Let's assume that what? You are selling cars. You import cars for sale. And you import 10 cars. That's what? The amount that you spent on importing the cars serve as a what? Purchases. So it does not include, it includes both what? Both cash and credit purchases. Provided the items is what? Is being bought for resale, then we categorize it under what? Purchases. Then number 4 is carriage inwards. Carriage inwards simply means what? The cost of bringing goods into the organization. The cost of bringing goods into the organization. That means what? You mean transport cost. So if I purchase an item for resale for 10,000 naira and I spent 5,000 naira as what? As the transportation cost, it means that what? The carriage inward is 5,000 naira, because this is the amount that it cost me to bring the goods into the what? Organization. Then number 5 is return outwards. They are what? They are goods return from the what? From the business to the supplier, or goods return from the seller to the supplier. Now it's possible that what? You purchase some goods from the supplier, from the manufacturer, from the producer, okay? And you discover that what? By the time you bring them to your firm, some items are not okay. It is within your right for you to what? To return it. Okay? And what? They replace it with what? With another one. So goods returned from the seller to the supplier is termed return outwards. While return inwards are goods returned from the customer to the seller. Can you see the difference now? Please, you need to take cognizance of this. Return inwards. Return inwards is what? Goods returned from the what? From the customer. Customer to seller. That's return inwards. While return outwards is what? From the seller to the what? Supplier. Okay? So you might not also see it as what? Return inwards. So you must also take note that return inwards is also known as what? Sales returns. You can see it as what? Sales returns. While return outward, you can see it as what? Purchases returns. So another name for return inwards is sales returns, and another name for return outward is what? Purchases returns. How do you treat those items? I'm going to explain after this. Then number 7 is what? Number 7 is sales. Okay? The sales are the what? Are the total amount realized from the sale of goods or services. It is possible that what? The business you are running are into services like school business, consultancy, or what have you, or you are into selling of what? Commodities, physical products. So the total money you realized, the business realized from the what? From the sale of goods or services is called sales. You can also call it what? Turnover. Okay? So another name for sales is turnover. Another name for sales is what? Turnover. Then number 8 is gross profit. Gross profit is the profit that is what? Derived before the deduction of what? Expenses. So the profit that is derived before expenses being deducted is called gross profit. So these items from number 1 to number 8, opening stock, closing stock, purchases, carriage inwards, return outward, return inward, sales, gross profit or loss. They are the items that can be found in your trading account. So in your questions, you can be asked to what? To find the missing figures, either opening stock, closing stock, or between number 3 to what? Number 8. So it's very important that you understand these terms very well. Okay? Now, before we go to the format, let me also explain some of the items that can be found in your profit and loss account. So items that can be found in your profit and loss account. You recall I told you that profit and loss account is prepared to determine the what? The net profit or loss. So the items that can be found are basically expenses. Expenses like rent, electricity, rates, insurance, as well as what? Net profit or loss. So all the expenses incurred in the course of what? Running the business. The expenses incurred in the course of what? Running the what? Organization are all categorized under what? Expenses. Okay, so now let me give you the formulas for each of the items in the trading account as well as the what? Profit and loss account. First, let me give you the layout. So you have your opening stock, which is also known as opening inventories. Then you add your purchases. You add your purchases. If you are having carriage inwards in the question, you also add your what? Carriage inwards. Carriage inwards. Then also, if you have return outwards, you are going to less. Return outwards. You have to subtract from this figure. So when you less, you bring the balance here. Then you add this and this together. Okay, after that, you can now less your closing stock or your closing inventories. So when you less, this figure stands for what? Cost of goods sold. Cost of goods sold. Cost of goods sold, or you can also call it what? Cost of sales. Cost of sales or cost of goods sold. Now, what are we looking for? We want to look for the what? Gross profit. Gross profit. So you come to the left-hand side, the credit side. You put down your what? Your sales, the figure for your sales. Then, if you are having return inwards or sales returns, you subtract. So we less return inwards. Return inwards. Okay, so you now subtract your what? Cost of goods sold. The figure, you subtract it from what? This is our net sales. Sales less return inwards is equals to what? Net sales. But if you are not having return inwards, you just put the figure for what? For sales. So our net sales minus cost of goods sold will now give us our what? Our gross profit. So our trading account ends here. Our trading account ends here. Then your gross profit here will be brought down here. Okay, there's no space. All right, so this is UTME 2014, question 29. We are given the trading profit and loss account of minor merchants. And we have our stock. This is opening stock to be 80,000. We have purchases to be 90,000. Then cost of goods available for sale is 170,000. That's the addition of 80,000 plus 90,000. It gives us 170,000. Closing stock figure were not given, question mark. Cost of goods sold were not given, question mark. We're giving our gross profit to be what? 150,000. Then on the left side, we have our sales, which is 300,000. We have return inwards 30,000. So our net sales is 270,000. So what are we asked to find? We are asked to determine the closing stock. We are asked to what? Determine the closing stock. Now, before we can determine the closing stock, which is stock 31/12/2010, we have to get the figure of our what? Cost of goods sold. So since we are giving our gross profit, don't forget that number one, our cost of goods sold is equals to what? Opening stock plus purchases minus closing stock. Also, our gross profit is equals to what? Sales minus cost of goods sold. Now, in this question, we're not giving cost of goods sold, but we're giving opening stock. We're not giving closing stock. We're giving purchases, we're giving gross profit, we're giving sales. So the first thing we do is this. Our gross profit, which is 150,000, we'll put it down. Gross profit equals sales. So gross profit 150,000, you write it down, equals to, we are also giving the sales figure to be what? 270,000. Please take note, you have to use this figure for net sales, not this one. So that is sales, which is 270,000 minus cost of goods sold. We're not giving, question mark. So let me represent that. Okay, let me just put it as what? COGS. So we want to look for the figure for cost of goods sold. Like I told you, we have to get this figure before we can be able to get our closing stock. So it means that what? Our cost of goods sold will be equals to what? 270,000 minus, you bring this 150,000 down here, minus what? 150,000. So cost of goods sold is equals to what? 270,000 minus 150,000. 270,000 minus 150,000. So it means our cost of goods sold is what? 120,000. Now that we have gotten our cost of goods sold, we can now what? Determine the closing stock, which is the original question that we are given. So our closing stock, we are going to apply the cost of goods sold formula, which says that what? Cost of goods sold, which have gotten the answer 120,000 equals to opening stock we are giving plus purchases we are giving. Then the closing stock is now what we are going to look for. So let me use this place. Okay, so let's go. Cost of goods sold, which is what? 120,000 equals to opening stock 80,000 plus purchases. Our purchases is what? 90,000 minus closing stock. That is what we are looking for now. Closing stock. So we are going to add 80,000 plus 90,000. So we have 120,000 equals to 80,000 plus 90,000 will give us 170,000 minus what? Closing stock. So our closing stock now, will be equals to 170,000. This 120,000 comes here, becomes what? Minus 120,000. So closing stock figure, the final answer will now be what? 170,000 minus 120,000 will give us what? 50,000. Okay, so let's go to the option. That is what? Correct option is what? Option C. Okay, this is UTME 2013, question 15 and 16. We are giving sales 232,000, opening stock 28,000, purchases 128,000, carriage in was 4,000, carriage out was 6,000, closing stock 10,000, discount received 18,000, expenses 20,000. So question 15, we are asked to calculate the gross profit. Gross profit. Now, in all these details you are given, please take note that we are not going to touch carriage outwards, as well as discount received, as well as expenses, because these three items are found in the profit and loss account. So let's solve straight away. Gross profit. What's the formula for gross profit? Gross profit is equals to sales minus cost of goods sold. Okay? And our cost of goods sold is equals to what? Opening stock plus purchases. Okay? Now, in this question, we are giving carriage inwards. So, it means that we are also going to what? Add the carriage inwards plus carriage inwards. Carriage inwards. Carriage inwards. Yes, then we are going to subtract minus closing stock. So we are asked to calculate the gross profit. Let's get our cost of goods sold first. Don't forget, gross profit is equal to sales minus cost of goods sold. So for us to get the gross profit, we have to calculate the cost of goods sold first. And I've given you the formula. So our opening stock is 28,000 plus purchases. Our purchases is 128,000 plus carriage inwards. Our carriage inwards is 4,000 minus closing stock. Our closing stock is what? 10,000. So the total figure for cost of goods sold, we are going to add and subtract the figure now. We have 28,000 plus 128,000 plus carriage inwards, which is 4,000, minus closing stock, which is 10,000. So our cost of goods sold is 150,000. 150,000. So since we have gotten our cost of goods sold, we can now get our gross profit, which is sales. So our sales is 232,000. So gross profit now is equals to 232,000 minus cost of goods sold, which is what? 150,000. So final answer, 232,000. 232,000 minus 150,000. So final answer is 82,000. Our gross profit is 82,000. So correct option is option C. Okay, so we move straight to question 16. We are asked to calculate the expenses debited to the profit and loss account. So these three items are asterisk. I said they are going to the profit and loss account. But discount received will be added to gross profit. So the expenses here will now be carriage outwards. Expenses that will be debited will be what? Carriage outwards, which is 6,000 plus, then of course we have these expenses, which is what? 20,000. So 6,000 plus 20,000, total figure will be 26,000. Okay, so where's the option? Correct option is what? Option C. All right, so this is the layout of profit and loss account. The gross profit is brought down from the trading account on the credit side. Then you add any income such as discount received, rental income, commission received. All those incomes will be added to your gross profit. Then on the debit side are your expenses. electricity, rent, rate, bad debt, depreciation of fixed assets. Then if the credit side is greater than the debit side, then you have net profit. But if these expenses, the expenses side, the figure is more than the income side, you have your what? Your net loss. So this is UTME 2008 question 15 and 16. Now we are given the question trading account. The gross profit margin is 20%. Question 15. What is the gross profit? So the gross profit will be equals to what? 20% of what? Of the sales. That's 20 over 100 times 96,000. Okay? So 20 over 100 times 96,000, that's 20%, divided by 100 times 96,000 will give us 19,200. Okay? And that is what? Option C. Then number 16, we are asked to determine the closing stock. We have to get the cost of goods sold before we can get the what? The closing stock. Okay, our cost of goods sold is equals to opening stock plus purchases minus closing stock. Okay, now our cost of goods sold, COGS, we are not given in the question, but we have gotten our what? Our gross profit. And don't forget that your gross profit is equals to what? Sales minus cost of goods sold. So it means our gross profit, which is 19,000, we have what? 19,200 is equals to sales, which is 96,000 minus cost of goods sold. So we have cost of goods sold is equals to 96,000 minus 19,200. 96,000 minus 19,200 will give us 76,800. Now, since we have gotten our what? The value for our cost of goods sold, then we can now get the value for the what? Closing stock. So don't forget, we said cost of goods sold is equals to what? Opening stock plus purchases minus closing stock. So our cost of goods sold now, which is what? 76,800 is equals to opening stock, we are given in the question, to be what? 19,500 plus purchases, which is what? 68,700 minus closing stock, which we are looking for. We are looking for the closing stock. So we have 76,800 equals to, we are going to add these two figures, 19,500 plus 68,700. Okay? 19,500 plus 68,700. And that will give us what? 88,200. 88,200 minus what? Closing stock. So our closing stock will now be what? 88,200 minus 76,800. So closing stock will now be what? Final answer, minus what? 76,800. We have 88,200 minus 76,800. So our answer is what? 11,400. So correct option is what? Option D.